If you were to look at Korean markets, for about 5 years, Korean markets did nothing. In the last 1 year, Korea has outperformed to such an extent that it's covered up 5 years of underperformance. If you are sick, you go to a doctor and say, cure me. When it comes to investing, if you don't have the skill, leave it to an asset manager to do it for you. Many of the technologies where India is behind will drive the world's growth. So semiconductor, I know India is far behind the world in semiconductor space. I would believe global investing helps you risk-adjusted wise, give far better returns. The only thing an investor can do is reduce risk, don't be return chasers, try and be risk reducers. India is just 3 or 4% of the world's market cap. It just tells you 97% of the opportunities are not in India.
Hello and welcome to Why Not Mint Money, your go-to personal finance podcast. I am your host, Neil Borate. From AI and semiconductors to commodities and luxury brands, some of the biggest investment opportunities today are global. So how should Indian investors think about investing beyond domestic markets? Joining me today is Vaibhav Shah from Mirae Asset Investment Managers India. Vaibhav Shah is Head of Products, Business Strategy and International Business at Mirae Asset Investment Managers India. With over 20 years of experience in mutual funds and financial services, he has worked across product strategy, business development and international investing. Prior to Mirae Asset, he was associated with institutions like ICICI Bank and TBS Bank. Vaibhav, it's a pleasure to have you.
Yeah, thanks Neil, and good to be meeting you.
So Vaibhav, India is 3% of the world. Where should global sit in an Indian investor's portfolio?
Now, I know Neil, you asked a most pertinent question and important data, like you rightly pointed. India is just 3 or 4% of the world's market cap. It just tells you 97% of the opportunities are not in India. A year back, India was the 4th largest economy in the world. We've now slipped to the 6th largest economy in the world. So when you invest in one country, you're taking a view on one economy, one market, one currency. And when you want to invest, you're trying to create wealth. And for wealth, you would like to invest in an asset class which generates the better returns. So I would say that if Indian market doesn't perform, you should be open to investing into global markets, because the idea is to generate wealth for yourself and your family. And hence, you should diversify outside India. Second is, just to add to that, is it reduces the risk of investing in one currency and gives you a flavor of multiple currencies and flavor of multiple markets as part of the portfolio.
Absolutely. Now let's talk AI. AI, of course, is not very present in the Indian market and it has had a spectacular rally.
Right.
But to what extent is this priced in?
Now the good thing is, maybe your question also has the answer, is that AI is not come into India. And when people say, is things priced in, I would say a lot of the geographies don't have large AI exposures, which means as AI penetrates to many markets, and India is one of the largest economies from a population or a use perspective as well, there is enough and more legs for AI to grow. And I would believe AI is a disruptor of disruptors. So can we say that AI is done and dusted? Not really. What can happen is some companies will become expensive. The valuations will be quite excessive. And that happens with every market, right? You have stages where they become excessive or go in a bubble zone and they self-correct. I think so we are in that zone that AI will continue to do well. It will create disruption. Idea is, can you identify good businesses in multiple countries to participate? Like you said, in India, we don't have AI companies listed in India. Only on the fear of AI, some of the large IT firms in India have corrected quite meaningfully. Just tells you how they can disrupt. AI can disrupt the world, and definitely you should participate, is my view.
Right. And Vaibhav, beyond AI, what other opportunities are there?
So I'll tell you an analogy that I want to give is, now with Insta, fashion can come to India in a day, maximum. But can you bring manufacturing plants to India in a day? Not possible. So what has happened is, many of the technologies where India is behind will drive the world's growth. So semiconductor, I know India is far behind the world in semiconductor space. If you see currently geopolitical risk is high across countries. It's now not the war of soldiers, it's a war of technology. Can you have a Captain America shield over you? Can you protect yourselves from the drone attacks? Your enemy is trying to say, oh, I brought down 1 plane, 3 planes. Bringing down 3 planes is an achievement for a war. So it's a technology-driven war. India still needs to go to that extent to create a strong defense infrastructure. I would say then blockchain is a technology which is world over used, and especially a lot for financial products. India still is not used blockchain as a technology for financial products. Data centers, again a huge theme which will drive global growth. Listed space, India doesn't have much participation. Rare earth materials, actually the wars, if you see, we are talking about ideological differences, etc. But wars are always about resources.
Yes.
And whoever has the resources can command, to dictate terms, which we are seeing currently. Even small countries are able to fight with the larger ones just because they have resources. So, rare earth materials, something India is missing out. So, I would believe all these are big themes, structural themes. India doesn't have participation. If India doesn't have, maybe you can invest globally to pick them up.
Yes.
Early.
Yes. Now, Vaibhav, when we talk about global investing, is it more return enhancement or is it more risk reduction?
No, good question, Neil. So, when we say investing, we always talk about risk-adjusted returns. How many actually follow risk-adjusted return? Very difficult, because we end up chasing the best performing market. So if you were to see, I'll give you an example. Mirae Asset is a Korean asset management firm. But Mirae, if you were to look at Korean markets, for about 5 years, Korean markets did nothing, right?
Yeah.
India was clearly an outperformer. In the last 1 year, Korea is outperformed to such an extent that it's covered up 5 years of underperformance. Now, if you were to now buy a Korea, is it the right time? That's a question that will always be in your mind. But eventually what happens, the retail says, oh, Korea has done well, it should continue to do well, and I should buy it. Now, the idea is, when you invest globally, you are trying to capture things which are not in India. That should be the first thing that you want to do. Because India has good consumer businesses, it has got good retail businesses, we have good pharma presence. So whatever is there in India, maybe play to that. What you don't have in India, something that you can take exposure outside India. And because you diversify to China, US, Korea, Japan, etc., you're not taking a view on one currency, one economy, one country.
Yeah.
So I would believe global investing helps you risk-adjusted wise give far better returns and reduce the risk, which is what the only thing an investor can do.
True.
Is reduce risk. Don't be return chasers. Try and be risk reducers.
Yes, absolutely. Now, a lot of people say that I live in India and I spend in India, so why do I need to invest abroad? What would you say to that?
A good question, Neil, but I'm sure all of us go outside India as well, right? I had the speech of the PM recently, and he said, travel more in India, don't go outside India to travel much. I'm sure some of our kids also go abroad to study. So we live in India, we spend India, but do we know that some of the brands that we use are not Indian, right? The phones that many of us are using are maybe the foreign names, or the clothes that we wear, or some of the cars that we buy are not Indian. So you're buying some of these. When you buy them, why do you buy them? They give you a certain, whether it's a status appeal or a use appeal, which is very strong and far better than the ones that you have in India. So if you can use the same logic for shopping, why not for investing?
Yeah.
If there is a superior market to you, a superior company available to you, why not?
Absolutely.
So definitely stay in India. That's what I've also been doing and would like to stay always in India. But when it comes to investing, my idea is to create wealth for myself.
Yeah.
So if the opportunities are in India, well and good. If not in India, I'm open to investing outside.
Yeah, absolutely. So, in your experience, what are the barriers, mental and physical, that stop people from investing overseas?
See, I would say first is the mental barrier, because the companies, if you don't know them, you feel, can I invest? So if you see some of the brands in India, you see their hoardings, or physically if you can see them, or the products you use, then you get a comfort. So the mental barrier remains, okay, can I use the products and invest where I am actually using? But I will tell you, in our daily life, from the time we brush till the time we sleep, if you were to make a list of the products that we use, I will not be surprised if 50% of the products that we use are global as well.
Yeah.
So the names are familiar, whether it's a Meta or a Microsoft or a Google or a Netflix, etc. So we know them, we use them quite regularly. So can we make them as part of investments? Maybe we can, because we know how strong their content or their product superiority is. So mental barrier is there. But the second challenge is, how do I invest? The how to invest is the tough part, because till recently, mutual fund was the most easiest way to invest.
Correct.
And for the last 2-3 years, mutual fund route has been to a large extent stopped, because hardly funds are taking money. So the how part is becoming tough. I don't think so people know that you can use and invest $250,000 per person per year under LRS and invest outside India through either brokers or funds or any other route. So the question is knowledge on how to use this route, and that's creating the challenge. And to some extent, people are saying, I would say to that extent, Indian markets in the past did deliver good returns. So you said, if I'm making 12-14% in India, why go abroad? I understand this, so why go abroad? But as India has underperformed for the last 18-24 months, people are now exploring, can I go globally?
Yeah. So Vaibhav, it can get quite confusing with markets like Korea, America. How does one pick?
It's a very difficult question, right? To pick a stock in India is a tough one. To pick countries which have so many stocks is a tougher one. So two things. As an investor, if you can spend time, energy, go through sites like Mint, your site, FinPrime, etc., and do your own research, I'm sure people can try. Or maybe if you cannot spend that much time, energy, leave it to an expert to do it. So you have got asset management firms like Mirae or others who can help decode investing, which country, which theme, and how to do it.
Yes,
do
absolutely.
it for you.
All right. And the other thing, Vaibhav, is since the mutual fund route is closed, what are the other options for investors to diversify?
Yeah, so that's, Neil, actually the most important one is, we talked about global investing. The investor might think, oh, sounds good, I want to now buy. Where do I buy? So we briefly touched that there is an LRS limit, $250,000 per person per year. So within the LRS limit, an investor can, using the LRS limits, buy through broking accounts into, say, other markets like US, etc. Because most brokers are not tied up across many countries. But an interesting opportunity is also opened up through the GIFT City route. Now, GIFT City is a jurisdiction which has been started for the last few years. The Indian government has started this jurisdiction so that Indian economy can compete with the likes of Singapore, Hong Kong, Dubai, etc. And the idea of GIFT City was to allow two ways of capital, to attract capital into India and also send money outside India, because you can't have a jurisdiction which only allows money into India and can say we are a global sort of jurisdiction. So through the GIFT City route, a lot of funds have been launched. We ourselves have launched few funds in the GIFT City, which allows resident investors access to global markets. It allows NRIs and foreign nationals access to India. So multiple combinations are allowed. But investors, if they come through this route, they can invest into global markets. There are various types of products which other asset managers have also launched. So you have retail mutual fund schemes, you have PMS schemes, you have AIF structured funds. So depending on your ticket size, your risk appetite, how you want to invest, you have all the three options available, whether you do retail MF, PMS or AIF, all through the GIFT City route to make your investment journey happen. And I always keep saying that, when it comes to investing, it's the same discipline. Like if you are sick, you go to a doctor and say, cure me. When it comes to investing, if you don't have the skill, leave it to an asset manager to do it for you. So nonetheless, you need to attend webinars, hear to podcasts, educate yourself, because investing is not easy. Money making is not easy. So do attend as much as possible to webinars, podcasts, and educate yourselves. But globally, you have a lot of opportunities, and enough wealth creation can happen if you take the right vehicle.
Yeah, as you rightly said, it's a combination of educating ourselves and going to the right people.
Right.
Investing overseas is not just about one particular theme. It's not about AI boom and chasing the past 1 year winners. It's about investing in the products that you actually use on a day-to-day basis. And to start this journey, of course, it's difficult. You have to understand the steps. But once you do, the ultimate objective is to reduce your risk, not to chase returns. Vaibhav, thank you for joining us.
Sure.
And to our listeners, if you enjoyed this conversation, please don't forget to subscribe to HT Smartcast podcasts for more such content. Until next time, make smarter money moves. This is Neil Borate signing off.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.